In tonight's Business Insider, tech stocks, airlines, another up and down week on Wall Street. We open with Apple. Last week, billionaire investor Carl Icahn told CNBC he sold his stake in Apple, citing concerns about the tech giant's prospects in China. For more, I'm joined by Jason Howell, family wealth advisor at Jason Howell Company. All right, Jason, before we talk China, bring us up to date on Apple's value. How far has their stock fallen, and will that trend continue?
Well, about 12% since we started this year, Morris, and about 9 days straight of falling prices, and there's nothing fundamentally that's changed to make us think that'll stop. You know, what we're looking at is a company that's done well traditionally. This is the first time year over year that they've had iPhone sales drop, and so that's a big significant move for them. But I think what folks like Carl Icahn are looking at, billionaires like Carl Icahn are looking at is, you know, where's the innovation? Tim Cook was also on CNBC very recently, and what people have seen is Tim Cook since 2011 haven't been very Steve Jobs-like. You know, there's no innovation like 2007 when the iPhone came out, or 2010 when the iPad came out. What sophisticated investors are looking for, that class, is they're looking to see some innovation, something to get them excited. Otherwise, they'll keep walking away from this stock. I would mention, though, if you're not a billionaire and you see a company with $250 billion on its balance sheet, relatively good management, good market share in its particular industry, those kinds of companies you usually take a second look at.
Good point. All right, let's talk more about Carl Icahn, his concerns about Apple, and now the China card. What are the worries here?
Well, most people think or might guess that the worry here is that China's slowdown is causing Apple to do poorly, and so that's why Carl Icahn is pulling out. But it goes a little deeper than that. China has had a history working with technology companies from the U.S., putting different kinds of limits on what they can do, in particular Microsoft, Qualcomm, even a little bit of Google. And in this case with Apple, Apple just isn't a product company. They're a service company. They try to be an entertainment hub. And where China is resting its influence is on the iTunes and the iBooks. And as long as there's pressure on how they can grow, how Apple can grow iTunes and iBooks within China, there's going to be concern. People like Carl Icahn have mentioned, though, as soon as there's less worry about what's happening with those particular kinds of products or services, they'll be back in.
Interesting. All right, Apple is not alone. Twitter took a beating as well in the stock market. Should investors be concerned about tech in general?
Well, investors should always be worried about technology, especially when NASDAQ, which is the tech index, has dropped about 6% for the year. But inherently, tech is really about innovation, which is why Apple is having its concerns right now. Innovation involves risk, a big risk, but big risk offers big reward. If you're someone that's investing in the tech industry and you have more than a 10-year time horizon, then you should just be patient. Wait to see what happens and feel like you're in the right play. If you have less than 10 years, that's the time you should be working with someone to see whether you're well diversified for this particular sector.
You're also following a local acquisition of note. On Monday, software giant Oracle purchased an energy data company called Opower for $532 million. Why is that significant?
Well, for one, it's significant because of the 30% premium it's giving to Opower stockholders. I mean, that's a pretty big deal.
Wow.
It's pretty interesting because of what Opower actually does. They track information for energy around households for millions of households around this country and soon around the world. And they sell that information to utilities like Exelon based in Chicago, which is a company that recently merged or purchased Pepco based in D.C. So you can see we're having a pretty big impact in this world. When it comes to Oracle as a company and Larry Ellison as the CEO, I think what he's trying to do and what the company is trying to do is be mentioned in the same breath as the Amazons and the IBMs and the Googles when it comes to cloud computing. And right now, DC is playing a major part in Larry Ellison and Oracle's growth.
All right, Jason, let's switch gears. During the past few months, we've talked at length about the price of crude oil. We discuss it all the time. Oil prices are low. That's tough on energy companies, but great for consumers. What about the airlines? How has the price of oil impacted them on Wall Street?
Well, whether we're talking about Southwest Airlines, United, Delta, their profit for 2015, as an example, has been never as high as it has been, I guess, since the end of last year, probably since 1978 when deregulation of oil actually began. U.S. airlines are doing very well. But it's not just because of the oil. Remember in 2014 when baggage fees increased and change fees increased, and it was because oil was so expensive, so they had to find some way to make money? Well, unfortunately for us, those prices never went away, those fees never went away, even though the price of oil has gone down. Folks in the airline industry can get a gallon of actual industrial grade gasoline for their planes now at $10. but for some reason they still want to charge us those fees. So when you couple those two things together, and in addition our strong dollar, which is how oil is measured, U.S. airlines are doing well. If you look at international airlines, like for example Qatar Airways, they're having a struggle because slow oil, or I guess low-priced oil, means for the companies in the Middle East doing much more poorly, which means less air travel. So once again, Morris, it's good to be in the United States.
Interesting. All right, these factors and more have contributed to another week of ups and downs. Put all this together for us. Do we keep calm and carry on, or what?
Keep calm and carry on. You know, money is an emotional issue for everyone. But actual fundamentals and facts about companies is typically a logical issue, and one that you don't really have to parse with your emotions. You know, when you have more than 10 years to invest in the market, then you can be pretty comfortable arithmetically that you're going to be okay as long as there are strong companies. And what are strong companies? Companies with good management, companies with good balance sheets, companies that are doing well in their markets. If that's the case, then you needn't worry. If you have less than 10 years where you're going to need that money, then I would say take a step back, talk with your family about your goals, meet with a fiduciary financial advisor, and make a plan.
Jason Howell, money manager, family wealth advisor at Jason Howell Company. Good advice. Thanks, Jason.
Thank you, Morse.